Hey everybody, Boris with BK Forex. Welcome to the weekly technicals for June 19th to June 23rd, 2017 for Euro dollar, dollar yen, and pound dollar. And the theme coming into next week is the dollar is still a buy, hobbled but not quite destroyed as we go forward. The big event, of course, this week was the FOMC meeting where the Fed raised rates, but more importantly, maintained its hawkish posture, essentially communicated to the market that they are very much willing to raise rates at least one more time before the end of the year. And ultimately, as that reality begins to seep into the market and the yield curve in the U.S. begins to appreciate, that should be net positive for the dollar. A lot of the dollar movement, we had a lot of dollar sell-off prior to the Fed. A lot of that kind of arrested itself after the FOMC announcement. Although the U.S. data has not been superb, and that is clearly a serious risk, because if the U.S. data continues to deteriorate, a lot of the Fed promise is probably going to go by the wayside. Still, at this point, benefit of doubt should still go to dollar bulls, and we're still very much in a buy to dip territory for most all the currencies against the dollar. We'll take a look at the calendar first, and you can see that this week coming up, very, very lackluster as far as data set goes. We have PPI data out of Europe, out of Germany, which is likely going to be negative Europe because we've had a very, very sharp decline in wholesale prices, and generally inflation in the month of May was considerably worse than it was the month prior. Whether that's going to have a negative impact on the euro remains to be seen, but it certainly is a negative economic factor going in. Trade data out of the U.S., housing data out of the U.S., nothing really of any serious import. And then we end up the week with the new home sales and PMI data out of the U.S. There's no UK data whatsoever on the tab here, and no Japanese data. So it's really a very, very bereft calendar as far as economic data goes, and it's really going to be very much more where the fixed income markets are trading, where equity markets are trading, and just generally whether there's going to be some kind of sentiment continuation of the dollar. Now, what's interesting is that despite all of the tumult this week, the actual ranges have not changed very much at all. If you look at the euro, it's still very much 113, 111 range. If you look at the yen, ironically enough, despite all the big movements this week, still 1150 to 0950 range. Although I will say I think the bias here is to the upside, and I will say the bias from the euro is to the downside. And of course, the pound remains a negative bias still within that 26, 29 range after the horrendous UK election. I will say one thing that's kind of interesting about the pound is that the politics of UK may actually be turning positive pound. And what I mean by that is there is some rumors now, and of course by the time this goes out, and maybe next week it'll be different, there's some rumors now that Theresa May's days are really literally numbered. She is lost badly in the election. She seems to be very, very flat-footed with this horrible fire that happened in London. Generally, sentiment against Tories is really turning very quickly. And as they're losing public support, there is worry in the Tory party that she's going to bring them down with her. So a possible situation here is if she resigns, we could have a new Tory leader. I doubt that's really going to be the scenario, but there's a possible scenario. More importantly, what all of that means is that we're much closer to the possibility of a soft Brexit rather than a hard Brexit. Ironically enough, the worse the economic situation in UK gets, the better the situation for the pound may be, because if they will be much more flexible in doing a soft Brexit, which will allow free movement of individuals from Europe into UK in return for essentially the same kind of trade ways, and that would eliminate a huge amount of economic risk out of the UK economy and give the pound a boost. So while pound is certainly negative technically, there's a clear fear here, in my opinion, of a political risk, and I'd be wary of just getting too aggressively short cable. Let's take a look at the charts here and just see how everything shapes up. So yes, euro today hit a nice big bounce off of the 1150 support, but still it's a very distributive pattern. We are just been distributing for a whole month here with a 113 at the top. This 1150 is the key support. A break here below does open up the run certainly towards 111 and most likely all the way down up to the 110. 110 was the big breakout zone post-Macron election. And I think it's quite possible that we can return this. This really isn't a function of weak European data. We have okay data coming out of Europe. It's much more the question of whether the market gets a little more bullish dollars, whether U.S. yields begin to come off the floor. If U.S. yields begin to increase next week, markets begin to start buying the idea that the Fed is going to raise another rate before the end of the year, that should be positive dollar and should have more profit taking in the euro. It's really the technical argument I'm making here is the euro is really in a profit taking mode rather than anything else. If it takes out 113, all of that thesis is completely busted, and it's a breakout move, and the euro just continues to power on all the way up to the 115 level. But until and unless we take that to 113, it's really sell the rally mode here because we're still in a big distribution top. Dollar yen, on the other hand, is the exact opposite story. It was very negative, but we did consolidate and find a very decent base here at this 109.50 level. And today, even today, though we couldn't hold the highs above the 111, it's still a pretty decent breakout. And more importantly, it's a higher low here. The low here is 108.24. The low here is around 109, so 109.25. As long as we hold these higher lows, there's a reasonable chance here as yields start to appreciate in the U.S. that we could start to move towards the 112, 112.50 level. That's the next resist point for that pair. And finally, cable, as I said, cable is very, very tricky here. Still technically very negative, big distributive top here. 130 is certainly a big, big top. It's going to be a very big challenge for cable to clear it. We don't have any kind of data set here, but I am worried, as I said, about the political risk that actually bad news here could be positive cable. Still, very likely that one more test down to the 26 level, not out of the realm of possibility, and therefore any kind of a move up here, probably pretty decent sell into the 28s. There is very little here intrinsically to want to bid cable up. The only way cable gets bid up is if the market starts to feel much more comfortable with the notion of a soft Brexit rather than a hard Brexit. If we still continue to have very, very militant rhetoric out of Theresa May's office, cable is going to very quickly deflate. And then the true decline here, if we break the 26s, takes us all the way back down to 25, which would be a complete circle from that big breakout we saw once she called the snap elections. So snap elections here and a complete decline here would be nice symmetry technically, which is something that we could see if we continue to argue for a hard Brexit. That's how the week shapes up. Not a lot of economic news, but lots of other news to watch for, and more importantly, watch the levels because those I think are going to come in very handy this week as we trade. Wish you guys the best luck, the best trading. Boris, over and out.